Okay, let's unpack this. Welcome to the deep dive.
Great to be here.
This week, we're diving deep, really deep, into a stack of articles, research papers, analyses, all focused on European transportation and logistics.
And very specifically, the week of June 5th to June 12th, 2025. That's the lens.
Right. So our mission today is to cut through all that information, yeah.
Exactly. Pull out the crucial nuggets, the key insights from just this one week, and really get a handle on what genuinely matters from these developments.
And looking at the material, it was clear this wasn't just any ordinary week. It felt, really defined by some big forces at play.
Definitely. You could see significant regulatory shifts happening or, coming into focus.
Yeah, and solid advancements in infrastructure, too, across different modes.
Mm-hmm. Plus that relentless push towards sustainability and digitalization, it felt almost urgent.
It really did. And companies actively rethinking their supply chains, their strategies.
And alongside all that, those ever-present cost pressures, they haven't gone away.
No, definitely not. So overall, it felt like a week that really captured the dynamic transformation that's happening right now.
Perfectly put, a real snapshot.
So let's set the stage then. Looking at the overall European logistics landscape for this specific week, what was the general feeling, the sentiment?
Well, the sources highlighted resilience, definitely, but paired with a really strong focus on efficiency.
Okay, so not huge economic swings necessarily?
Not according to the material, no. More like the industry was really heads down, proactively optimizing, tweaking operations, supply chains.
Amidst these constantly evolving market conditions.
Exactly, adapting.
And the theme that just seemed to leap out from almost everything we looked at was digitalization. It felt huge.
Pervasive is absolutely the right word for it. It was everywhere.
Like what examples jumped out?
Oh, loads. New warehouse labeling solutions like DryTac.
Yeah.
We saw Svoom in Greece digitizing their last mile ops with Faireye.
Right.
Manhattan Associates talking about integrating B2B fulfillment right into ERP systems.
So deeper integration.
Yeah, and companies like BRAS are gonna using advanced WMS for growth. Linde Material Handling expanding their automated forklift range.
Yeah.
Aiming for more end-to-end automation.
And that stat about customer experience, that was something else.
Ah, yeah. The 87% figure. 87% of logistics operators planning to use WhatsApp and chatbots for customer interactions.
That's huge. A massive shift in how they talk to customers.
It really is, integrating it right into the flow.
But why? Why such a massive, rapid push for digitalization now? Is it just about saving money?
Well, that's what's interesting. The sources strongly suggest it's not just about shaving off pennies here and there. It's much broader.
Okay.
It's strategic. It's about optimizing the entire value chain. Because, operational costs rising, fuel, labor, new tolls popping up.
Mm-hmm.
Companies need that real-time visibility. They need better service quality without costs exploding. They need to streamline.
So digitalization is the tool to manage all that complexity.
It's the key enabler, yeah. Smarter resource allocation, faster decisions, better customer interaction. It's crucial for navigating today's market. Competitive advantage, basically.
Okay, let's pivot a bit. Policy. That was another really active area this week, wasn't it?
Definitely.
Particularly the UK-EU relationship. Always interesting. And there was a really noteworthy development on food regulation.
Yes, this was significant. The UK committing to align its food regs with the EU's standards.
And the big potential impact.
Well, the hope, or the anticipation, is that the EU would then drop the sanitary and phytosanitary, the SPS checks and certification for those goods coming from the UK.
Wow. That could massively ease things at the border, couldn't it? Less friction.
Potentially, yes. That's the idea. Reduce that trade friction.
And where did this commitment come from?
It stemmed from talks at the UK-EU summit back on May 19th. And the sources suggest it's not just talk.
They're actually doing something.
Seems so. The UK government is evaluating current regs, and they've set up a new industry group, importantly, including folks like the British Retail Consortium, to guide how they align with upcoming EU rules.
Right. So is this just about food, or is it maybe signaling something bigger about the UK's approach post-Brexit?
That's the interesting question. Stepping back, this move towards alignment, especially on something complex like food, it really suggests a pragmatic pivot.
Pragmatic how?
Well, it looks like they're prioritizing minimizing trade friction, acknowledging that regulatory differences hit logistics costs, they hit supply chain fluidity, they hit consumer prices.
So practicality is winning out over complete divergence.
It seems that way. Operational efficiency in key areas taking precedence. And the material was specific, in this new DBT group is looking at 6 key EU regulations.
6? Which ones?
Things like packaging waste, PPWR, chemicals registration, REACH, product safety, GPSR, the carbon border tax, CBAM, sustainability reporting, CSRD, and even the deforestation rules, EUDR.
Wow, okay. That's a pretty broad sweep across compliance. So beyond the UK, any other big cross-modal policy notes this week?
Yeah, a couple things. Mention of the deadline extension for the Women in Rail Award 2025.
Okay.
And ongoing recommendations about boosting women's participation in EU transport generally.
Yep.
So that focus on workforce diversity, inclusion is still very much there.
Glad to hear.
And absolutely critical, the extension of the road transport agreement between Ukraine and the EU.
Ah, yes. How long was that extended for?
Until the end of 2025. And there's a tacit renewal clause for another 6 months after that.
That feels incredibly important, especially now.
It's vital.
Yeah.
Fundamental for Ukraine's access to global markets, ensuring stable transit through the EU, strengthening those trade ties. It's got huge geopolitical and economic weight.
Definitely. Okay, let's dig into road freight specifically now. The backbone for so much.
Absolutely.
The analysis of Q1 2025 market rates and the sources. I found one finding quite surprising.
It really stood out, didn't it?
Yeah.
Despite demand being, well, pretty weak in Q1.
Yeah.
Overall spot and contract rates for road freight across Europe actually increased quarter on quarter.
That feels completely backwards. Rates up when demand is weak. Why?
This is where the sources point very clearly to the supply side, not demand.
Okay.
They put it down mainly to constrained capacity and those rising operational costs for carriers.
Like what costs?
New regulations, environmental compliance stuff, rising labor costs, and yeah, the driver shortage. Again.
The driver shortage. It just never goes away, does it?
It really doesn't.
Well,
It's a major factor here. The sources estimate something like 500,000 driver vacancies across the EU.
500,000.
Wow. And that kind of scarcity just puts massive upward pressure on wages. Carriers basically have to pass those costs on.
So it's not high demand pulling prices up, it's the sheer cost of running the trucks pushing them up.
Precisely. It's cost-push inflation dominating the dynamic. Carriers are forced to pass on wages, fuel, new tolls, CO2 standard compliance costs, even when demand is soft.
Which means shippers face a kind of non-negotiable cost floor.
That's the term one source used, yeah. Because of these structural supply-side issues, creates real pressure, maybe pushes companies to look at rail or sea more, or just squeeze their own margins.
Were there any geographical shifts mentioned? Where demand is moving?
Yes, a clear trend noted. Companies relocating production, and therefore shipping, to places like Poland, Romania, and Turkey.
Why there?
Mainly cited as risk mitigation and trying to reduce costs. And the sources expect this strategic shift to really shape demand patterns on European routes for the medium and long term.
Okay. Let's talk more about those new tolls and emissions rules. The sources had a table outlining some key changes happening right about now.
They did. It shows a really coordinated regulatory push. New CO2-based tolls starting in Belgium on July 1st, Slovakia also in July.
And these hit lorries harder.
Yes, designed to mean higher tolls, especially for older, more polluting trucks. Plus, you've got entry bans in many northern Italian cities for Euro 5 diesels starting October 1st.
And this all ties into the wider EU regs.
Absolutely. New EU-wide CO2 standards for heavy trucks kick in this July. Manufacturers have to produce cleaner trucks, which costs more.
Right.
And then looking ahead, ETS2 for road transport starts in 2027. That's expected to push fossil fuel prices up significantly.
So it's like a wave of regulations all hitting close together. What's the big picture strategy behind this?
It signals a very clear and honestly accelerating push towards decarbonization across the EU.
Okay.
It inevitably increases operational costs. It forces significant, expensive fleet modernization, which in turn probably speeds up the adoption of electric or maybe hydrogen trucks.
It's a compounding pressure.
Exactly. Compounding financial pressure, forcing a fundamental fleet transformation. It's a strategic lever governments are pulling to shift away from fossil fuels fast.
And those who invest early get an advantage.
That's what the sources suggest, yes.
Yeah.
Competitive advantage. And it clearly implies a growing market for green infrastructure charging, fueling, and the financing to support it all.
Any quick note on border controls impacting things?
Just that Austria has prolonged its controls with Hungary, Slovenia, Czech Republic, Slovakia until October 15th, which the sources noted can definitely add time and complexity for road freight through there.
Okay. Shifting gears now. Maritime shipping, obviously crucial for global trade. What were the big headlines this week on vessels, ports, the green transition?
A real flurry of activity in maritime, especially around new, greener vessels and the infrastructure needed.
Like what?
We saw reports Sanmar delivered a new eco-friendly, high-tech tug, the BOSS, in Stavanger. MedMarine launched the first of 6 new tugs for OMMP.
Okay.
But the really big one, perhaps, MedMarine also announced the Volt-RA, slated to be the first fully electric tug using Caterpillar batteries.
First fully electric tug, that definitely grabs attention. Any other green vessel news?
Yes, quite a bit. The new Cyclone-class CTV designed for wind farms. New steering systems specifically for wind farm service vessels. Viking Line shared details on their future electric ferry, Helios.
That's quite a lot of news specifically on electric or green tech vessels in just 7 days. What's it tell us?
The sheer volume signals a rapid acceleration in maritime decarbonization. This isn't just talk anymore. It's actual orders, deliveries, real tech.
Clearly
driven by regulations like the EU ETS deadline looming, but also growing market demand from shippers who want greener options.
So we're past the early adopter phase.
Seems like it. Moving into a more aggressive, capital-intensive investment cycle, which implies massive spending needed for fleet renewal and port upgrades to handle these new fuels and power sources.
What about port infrastructure itself this week? Any news there?
Several things. The UK government unveiled a new vision for its ports, though details were a bit thin in the material.
Okay.
Toulon is continuing its shore power upgrade. Proposals to use an old coal terminal site for green hydrogen production shows the energy transition happening right at the docks.
Interesting.
In Antwerp, the first of those giant tunnel elements arrived for the Big River Scheldt connection, and designers were hired for major harbor works over in Jersey.
And offshore projects, wind farms and the like.
Yeah, renewables testing started at a facility in Falmouth. Allseas unveiled some plans around offshore nuclear. But interestingly, there was also a setback for an Equinor wind farm project.
Oh.
Yeah, opposition from the fishing industry highlights potential conflicts, as competition for offshore space increases.
Right. So all this green investment seems tied to meeting regulations. What kind of pressure are shipping firms under from things like the EU ETS?
Immense pressure. The deadline for ETS compliance is coming up fast. The sources were blunt risk of big fines and expulsion from EU ports for firms that don't comply with carbon pricing.
Wow, that's serious.
Very. And on top of that, many lines have made net zero commitments starting soon, like 2027. Everyone expects that to significantly hike costs, new fuels, different ways of operating.
So it's an immediate, unavoidable financial hit.
Absolutely. Immediate, significant burden. Companies have to internalize that carbon cost now.
Which forces their hand on adopting alternative fuels.
Out of necessity, yes.
Yeah.
And efficiency tech. But it also inevitably means higher freight rates for shippers. And likely, a competitive shakeup.
How so?
Well, firms that aren't prepared or don't have the capital, they face penalties, maybe restricted port access, a weaker market position. It fundamentally changes the cost structure of operating in Europe. Invest or face penalties. Creates a real split.
Any other maritime debates or future solutions mentioned?
There was mention of ongoing debates, some tension noted with Greek ship owners and the EU commissioner over the IMO's zero carbon plan specifics.
Okay.
And looking longer term, carbon capture and storage tech was mentioned, projected to handle maybe 15% of maritime emissions by 2050. So it's part of the long game, but not an immediate fix.
Right. Let's transition now to rail freight. Big infrastructure investments happening there, according to the sources.
Yes, a major theme was the EU's huge long-term investment in its core 10NT corridors, the Trans-European Transport Network.
And the goal there?
Clearly to boost cross-border connectivity and capacity for rail freight. Big time.
Any examples of these mega projects?
Absolutely. The Brenner-based tunnel completion, maybe after 2030, that'll allow much longer, heavier trains through the Alps. Big deal for North-South transit.
Okay.
And Rail Baltica, operational around 2030. Brand new standard gauge line connecting the Baltic states, opens up huge intermodal possibilities, improves north-south flow dramatically in that region.
These sound like game changers. What's the strategic thinking behind such massive rail investment?
It's a deep, long-term commitment from the EU to shift freight off the roads and onto rail.
Right.
These projects are literally reshaping the map for freight, focusing on resilience and sustainability. Cornerstones of the Green Deal and that whole modal shift idea.
Creating a seamless, high-capacity network.
That's the vision. one that can genuinely compete with road, especially for longer distances.
And there's support mentioned for Ukraine and Moldova to connect into this network, too.
Yes, the EU is actively funding projects at 10NT border points with Ukraine and Moldova, focusing on interoperability, making sure systems work together.
Which helps them economically and politically.
Exactly. Crucial for their recovery, paves the way for deeper integration later, shows the geopolitical logic, too.
So beyond the actual tracks, what about digitalization in rail? Operational efficiency.
Another critical area. It's really a two-pronged strategy alongside the infrastructure build-out.
Okay.
There's the ongoing rollout of ERTMS, the European Rail Traffic Management System. That harmonizes all the different national signaling systems. Big barrier historically.
Makes crossing borders easier.
Much easier. Seamless international trains, faster speeds, more flexibility, more capacity on the network.
And I saw mention of the digital automatic coupler, DAC.
Yes, DAC is the other huge piece.
Yeah.
Big investment plan underway to deploy it across Europe.
What does it do?
It automates the coupling and uncoupling of wagons, makes it much faster, safer, enables more automation in marshalling yards, seen as key for boosting efficiency and supporting that sustainable digital strategy for rail. There's even a specific Open European DE delivery program to coordinate it.
So ERTMS and DAC together, what's the combined impact?
This dual focus shows a really comprehensive strategy. It's not just new tracks, it's fundamental operational transformation.
Fixing all problems.
Exactly. Addressing the fragmentation and interoperability issues that have always held European rail back compared to road. Unlocking major efficiency gains. Making rail much more attractive.
Foundational changes then.
Absolutely. Essential for hitting those modal shift targets and emissions goals. Creating a truly integrated, high-performing network. And the fact the Rail Data Forum was happening this week just underscores that commitment to using data better, too.
And how is policy helping push all this forward?
Policy support is very explicit. The EU's sustainable and smart mobility strategy tied to the Green Deal has a clear goal.
Yeah.
Significantly boost rail freight's share by 2030.
And money to back it up.
Yes. Through the Connecting Europe Facility, CEF, funding infrastructure upgrades and helping modernize fleets with low or zero-emission tech. Plus, a recent commission study, noted in the material, found that increased competition in rail, partly driven by policy, has actually reduced freight costs already, making it more attractive economically.
So things are moving.
Seems so. And strategic thinking continues, like that draft paper from Europe's rail joint undertaking on future public-private partnerships for funding.
The overall aim seems clear. Make rail a truly viable competitor to road.
Yeah, level the playing field. Address the historical disadvantages. Foster a more balanced, sustainable freight system overall.
Okay, quick shift to air cargo. The global picture looked a bit softer this week.
That's right. The TAC index data showed a slight downward drift in global air freight rates, suggests a general softening.
But interestingly, that wasn't the whole story.
Exactly. While the global average dipped, one specific development stood out. UPS significantly expanded its network, actually nearly doubling air cargo capacity from India to Europe this week.
So global softening, but a major boost on one specific lane. How do we make sense of that?
It really highlights how nuanced air cargo is. The global trend can mask really robust growth on specific trade lanes.
Driven by specific factors.
Yeah, maybe manufacturing shifts, growing export economies.
Yeah.
So carriers make these targeted capacity injections where demand is strong. It's very localized, very responsive. General trends don't always tell the full story.
So carriers are being surgical with their assets.
Exactly. Very strategic deployment based on granular analysis. While some routes might normalize, others are dynamic and profitable, attracting investment. Highlights that market segmentation.
Makes sense. Any other air cargo news impacting Europe?
DHL Group announced a big $500 million Enter investment aimed at boosting Gulf trade routes and resilience there.
Not in Europe itself, but relevant.
Highly relevant. The Gulf is a massive global hub. Investments there definitely impact European connectivity and trade flows, especially Asia-Europe.
Okay.
Also, Hellman Worldwide Logistics expanding their digital express solution globally, including North America. Just shows that digitalization trend hitting air freight to efficiency, customer experience.
Right, that digital thread runs through everything. Okay, let's pull back now. Look across all the modes. The sources talked about broader supply chain restructuring. What was happening there?
This was really insightful. Based on analysis of EU trade patterns from 2021 to 2023, included in the material.
And what did it show?
A significant underlying shift. EU imports moving away from countries the EU doesn't have trade deals with.
And towards
both other EU countries intra-EU 27 trade and external partners the EU does have agreements with.
So does that mean that companies are bringing production back to Europe, reshoring, or just sourcing from friendlier countries, partner shoring?
The data suggests both, actually. Early signs of reshoring, bringing production physically back, and definitely increased sourcing from those agreement partners, partner shoring or friend shoring.
Why is this happening? Just normal trade fluctuations?
The sources were very clear. No, this is something more fundamental. It's a policy-driven realignment.
Policy-driven?
Yeah. A deliberate shift away from purely chasing the lowest cost towards prioritizing resilience, supply security, and, frankly, geopolitical alignment.
Wow. The sources called it EU supply chain tectonics.
Yes. Great phrase. Like the ground shifting underneath global supply chains feeding Europe. It has huge long-term implications for logistics networks, routes, investment.
Favoring who?
It strongly favors integrated European logistics providers, those with strong networks within the EU and good connections to those aligned partner countries. It's strategic de-risking by the EU.
Reducing reliance on potentially unstable or non-aligned regions.
Exactly. And it forces businesses supplying the EU market to rethink everything. Where do you source from? Do you need new facilities inside the EU, stronger ties with suppliers in agreement countries?
Is it happening across the board or targeted?
It seems quite targeted based on the data.
Yeah.
Especially for sensitive supply chains, you see intra-EU imports rise, just as imports from non-agreement partners fall. And significant shifts even for distant agreement partners, particularly for critical goods or raw materials, deliberate, not random.
Okay. And we keep coming back to digitalization as a cross-modal trend this week. What did it look like zoomed out?
Well, we saw those specific examples: warehouse automation, new software integrating fulfillment, planning systems, that huge chatbot stat.
Right.
When you put it all together, what does it say about where the industry is on its digital journey?
Good question. What did the sources suggest?
That it's firmly in a mature phase now, moving beyond isolated projects. Towards integrated end-to-end solutions, connecting planning, execution, customer interaction, everything.
Yeah.
Competitive advantage is now almost entirely tied to tech sophistication, leveraging data effectively.
So smart logistics.
Exactly. Real-time visibility, predictive analytics, automation. That's the baseline now for leaders. It creates a big gap between them and the laggards. And, importantly, it drives demand for skilled people who can manage these digital systems.
And speaking of people, that workforce challenge, the driver shortage specifically, it just kept cropping up.
Unavoidable. Such a fundamental constraint. That estimate, 500,000 vacancies across the EU.
It's not just a cost issue, is it?
No, it's a fundamental capacity bottleneck. Threatens stability, growth potential in road freight. Directly hits delivery times, service quality, efficiency.
And when you put that shortage alongside other workforce things, like boosting women in transport, what's the overall picture?
It just highlights this urgent, systemic need for strategic human capital development. It's not just recruitment.
It's training, retention.
Yes, and actively diversifying the workforce to find new talent pools. Because the shortage limits capacity no matter how many new trucks or tracks you build. It's a critical bottleneck for growth and resilience.
Needs a multifaceted approach.
Definitely. Wages, sure. But also conditions, training pathways, maybe automation for simpler tasks, and consciously diversifying who comes into the profession, like those initiatives for women.
And there were compliance reminders, too.
Yeah, things like right-to-work checks, underscores the regulatory side of labor. Alongside those recommendations for women's participation, serves diversity goals and potentially helps with labor pressures long-term.
Okay, let's try and synthesize all this. Looking at everything from this packed week, what are the big strategic takeaways, the emerging trends?
Okay, pulling it all together. Several key trends aren't just emerging, they feel like they're rapidly accelerating now. First, the accelerated green transition. It's everywhere, all modes. Driven hard by regulations, CO2 tolls, ETS, but also real industry commitments.
Yeah.
Translating into tangible investments now. Cleaner tech, green infrastructure.
Okay.
Second, supply chain resilience and regionalization. Geopolitics, policy. They're fundamentally reshaping networks. That shift towards reshoring, partner shoring. Prioritizing resilience, alignment, not just lowest cost. Strategic de-risking.
Got it.
Third, digitalization as an operational imperative. It's not optional anymore. Tech sophistication, integrated solutions, using data. That's core competitive differentiation now. Enabling efficiency, visibility, better service.
Makes sense. Fourth,
those persistent cost pressures. Still a huge challenge. Balancing rising costs from regs, labor, fuel volatility with staying competitive on price. a constant tightrope walk.
And finally,
intermodal integration is gaining real, concrete momentum. Big rail investments like 10NT, digitalization like D8, strong policy support, it point to a clear, long-term vision for truly integrated, efficient intermodal transport across Europe.
so based on those trends from the sources, what are the main challenges and opportunities right now?
Challenges first. Managing those cost pressures is paramount, balancing costs and pricing. The regulatory burden complex, evolving environmental rules needing big investment, the workforce shortages, especially drivers, threatening capacity, and despite investment, still infrastructure gaps needing completion for seamless cross-border flow.
Okay, challenges noted, opportunity.
Significant ones. Sustainability leadership offers a competitive edge, attracts clients, maybe green finance. Technological innovation, AI, automation, software unlocks huge efficiency, visibility, new services. That shift to regionalized supply chains creates opportunity for providers strong within the EU or with regional partners. Intermodal growth is clearly supported, offering growth for rail and sea. And new trade corridors, like the Ukraine agreement, open potential new routes despite challenges.
Looking ahead then, what do these developments from just 1 week tell us about the short term versus the long term?
Short term, based on the sources. Expect continued upward pressure on road freight rates, new tolls, emissions rules, labor costs biting, intensified green investment, especially maritime and rail, as companies race to comply and gain advantage. And for shipping, immediate intense focus on ETS compliance.
And the longer-term strategic outlook
Clearly points towards a European transport and logistics system that's fundamentally more sustainable, deeply digitally integrated, and more regionally focused.
How so?
Decarbonization isn't a side project. It's redefining fleets, operations, energy infrastructure. Supply chains will keep prioritizing resilience and alignment over pure cost redrawing trade maps, more intra-EU focus, and completing 10NT plus digitalization like ERTMS and DAC. Those are pivotal for achieving modal shift and emissions goals, fostering a more robust, efficient, responsible network for the future.
And did the source material suggest specific actions for different players, like recommendations?
Implicitly, yes, and sometimes explicitly. For logistics service providers, the carriers, the message was accelerate green investments, prioritize digital transformation heavily, actively work on securing your workforce, optimize networks for those regional shifts, and really embrace intermodality. Make it core.
What about their customers, the shippers, manufacturers?
Sources suggested they critically reevaluate supply chains for EU alignment and resilience, not just cost. Factor in rising green logistics costs accurately, demand sustainable digital solutions from providers, and crucially leverage data theirs and their providers for much better visibility.
And finally, for policymakers, regulators.
Recommendations included: keep harmonizing cross-border rules to cut friction. Provide clear, long-term incentives for private green investment. Develop real strategies to tackle workforce shortages, training, maybe immigration, conditions, and actively promote data sharing and interoperability across the whole ecosystem.
Wow. That really was a week crammed with significant moves. Regulatory pushes, tech leaps, huge green investments, plus those underlying workforce and cost issues across every mode.
It really is a dense snapshot of all the major forces reshaping the industry right now.
Yeah.
Highlights the complexity, the interconnectedness, and the sheer speed of transformation being asked of the sector.
So given that rapid pace of change, regulatory, technological, and that really noticeable policy-driven shift towards regionalization we saw, here's a thought for you, listening. Right. What does this deep dive into just 1 week tell you about the fundamental future global flow of goods? And how might these big shifts in European logistics ripple out and impact industries far beyond transport itself? Something to chew on. Consider the connections. Keep exploring.
Thanks for joining us for this deep dive.